My answer for those who said, you know what, I have a $1,000. I wanna trade the market. What do you recommend right now? Your best investment or dash trade for $1,000 to invest in yourself in the knowledge of acquiring and understanding
Absolutely.
and understanding the market first. All right, welcome to episode. What is it? Number 7 already? Damn, already number 7.
7 already. All right.
All right.
7 of 700.
So it's been a great journey so far. A lot of topics that we have, a lot of topic and very intellectual guests that we have bring. And today we decided to do something interesting. Let's talk about something that we do and we are passionate about the most: investment, trading. We do on a daily basis. We trade cryptos, options,
Stocks, derivatives.
stocks, future contracts.
Yeah.
And why not talk about trading, right?
Been doing it a long time.
We're doing a long time. What are we drinking today before we get a little bit drunk and start recommending
Before
shit?
the bullshit comes out.
We got bullshit come out about trading.
Well, today I decided to change it up a little bit. I've been having this sweet taste, so I usually drink my Pappy Van Winkle.
Mm-hmm.
That shit's expensive, so I've been rolling with the.
Hey, this is gonna be an expensive conversation. What are you talking about?
Hey,
People might make money because of this conversation. The advice we're gonna actually tell them.
Maybe next week we'll break out the Pappy. But last week I tried the honey Jack. That was really tasty. And today on that same trend, I'm going with RC vanilla. So the vanilla RC has been pretty nice.
So you're gonna turn vanilla today.
Yeah, vanilla, not vanilla ice. Vanilla RC.
Vanilla,
So,
I see. Okay,
yeah, it's tight.
awesome, perfect. I'm sticking.
What
to
you
gin.
rolling with? Oh, you've been going on those. Are you rushing?
Yeah, I'm rushing.
You
It's
start
Wednesday
calling
already.
you Slovov. I mean, shit, man. That's like you've been drinking clear for like 3 weeks straight. And that ain't water. What is that, vodka?
Today
what
we're
you
gonna.
rolling with?
This is gin.
Oh shit.
Hendrix.
Jen's gonna dry out your
My in-law
gizzard.
from last episode brought it. We have a great time. We talk
right.
about Monterey
Yeah.
and all that, but and it was very smooth. So I kind of love it.
They
so
say
far.
that gin will pickle your liver now. You gotta
Exactly.
watch that shit, boy.
So let's flow then.
All right, let's roll.
Let's start with business then. Straight to the point.
Business. Let's get down to it. Let's throw some nuggets out there that they can use.
All right. Our team came up with a couple of questions. Very interesting questions.
All right.
Since we're talking about trading, we
Yeah.
need to talk about first a little bit about the market.
Mm-hmm.
You and I, we've been slowly cashing out the market.
Yeah.
Why? Because it's extremely extended.
Yeah,
You
it
know
is.
the market, the Nasdaq, which is a technology index,
The
S&P,
Q's. You got to be on your P's and Q's. Yeah.
the S&P 500, the Dow
S&Ps.
Jones.
Yeah.
A couple of sectors
Yeah.
out there are kind of like also overextended as well.
Yeah.
The one that we actually noticed was energy. The one that's kind of like
Yeah. Energy is it's coming off of a pullback, but just like we talked about, energy is very volatile it's very news sensitive.
I don't trust energy
you
sector.
like the shit that's going on in Afghanistan and all those oil producing countries, Saudi Arabia. If the prince takes a shit, and they put out the wrong headlines, and that tanks the whole damn energy sector. So yeah, energy is very volatile, even though it has some nice setups, right?
Yeah.
Yeah.
Right.
Yeah.
We'll speak about setup. We got to talk about a little bit of the things, the strategies that we use.
Yeah. It'll come
Technical
out.
indicators and all that shit.
Yeah.
We got this debate.
We'll throw out some nuggets, but remember, the game is to be sold, not told, right? We'll give a few nuggets, a little bit. But
I like that. I like that. One thing that our got our attention, the team actually was kind of like interesting on this to talk about first. Okay, you have the market.
Mm-hmm.
You and I agree that it's overextended,
yes,
right? You have treasury bonds tied to the interest rates.
yeah, and the bonds haven't really been acting right? I mean, you got the market's going up, the bond is going down. We would think in this environment, you got inflation, a lot of inflation worries, right? So your bonds should be going up.
Right. One thing that I noticed that's
weird.
happening, it's money flowing in and out of bond market consistently. Every time you see news about,
Inflation
Delta variant and all that, the money start moving into safe to heaven assets
should
like
be, right.
10-year treasury. And
Right.
it's happening, but in a very short-term notice. Then flows back again to equity, flows back again to Bitcoin, flows back again to other assets.
In other words, the market can't seem to make up its mind where it wants to go. in what direction it wants to go in.
And makes sense. It's being manipulated by the central bank. All the money that's being, printed, everything's going to all this market. The market right now is floated with a lot of money.
Yeah. And the Fed right now is not very hawkish. They're very, very, they're letting the kids just do whatever they want.
Exactly.
Right.
And because of this reason, something kind of like something interesting happened. One of those stocks that I track, in my portfolio of watch lists, right, came out was Coinbase, right? You and I know, we know what's Coinbase. For those who actually don't know what's Coinbase, just an exchange for buying and selling crypto.
Yeah, like your bank account or your trading account.
Like a trading account, right?
Yeah.
In this case, that stock went up like 6%
in one day, right?
in one single day. But you gotta understand, let's go a little bit, just a little bit deep on this. If it went up 6%, right, and it's tied to crypto, right now, because all the money, the hot money right now, still stocking to cryptocurrencies. And we've been having this conversation for a while. We have a couple of invites to talk about mining cryptocurrencies. You and I, we talk a little bit about cryptocurrency as well.
We stuck our pinky toe in the mining out.
It's just a pinky toe on that part.
Yeah, that wasn't too. We didn't get good results.
I'm with you.
Yeah.
But that tells you that all that hot money that's flowing into what it is like cryptocurrencies and assets and all that, that's tied right now with Coinbase, an exchange, right?
Yeah.
We use Coinbase.
We use it. We have it.
We use it. Very expensive. If you
right?
The
fees. It's one of the higher ones.
If you actually want to open up an account, right, with Coinbase, and you want to trade with Coinbase, because you can trade
directly
cryptocurrencies.
from there,
You and I have agreed that it's just pretty expensive.
Yeah, the fees are expensive, which makes now you can't. Your frequent trading is not going to work as well when you're paying them. Going opening and closing, their fees are like 5 times higher than some of the other ones. So that's going to impact your bottom line.
We decided to move to Kraken, another exchange.
And we do use Coinbase. They have a more flexible way to get your funds in the account. So we use them to bring the funds in, and then we wallet them to the other trading account.
Other trading account. So I mean, the advantage right now, if you want to go into cryptocurrencies, if you want to go very low risk, not buying 100% the crypto, the Bitcoin, you buy Coinbase, which is the exchange, right? It could be kind of like a quick trade that you can make, or if you actually believe in crypto, but it also, you don't want to be that risky on buying entirely the crypto.
Yeah, it's a derivative trade.
A derivative trade is to buy Coinbase, which is an exchange.
You're buying the industry.
Right?
Yeah.
Which, which reminds me to...
don't mind gold, sell shovels, right?
Yeah, exactly.
Yeah,
exactly. So part of that flow of conversation we're having here, another following topic that we received from the team was, every time, we're still talking about trading, right? Because that's the conversation of today, right? When we talk about trading now, could be any stock, it could be any option, it could be any derivative, it could be anything.
The rules
right?
are the rules.
Rules are the rules.
Right.
Some of the interesting questions that pops once in a while, it's technical indicators.
Yeah,
right?
it comes up all the time. Newbies, that's one of the main things they get caught up in. These screens full of technical indicators. It's a big hot topic. People have tons of questions about indicators.
What's your 2 cents on that?
Hey, I'm old school, so I'm gonna break it down real simple. Less is more. You don't need all those damn indicators. Trading is based on, especially technical, because you got investors that tend to look at fundamentals, like earnings and cost and sales and revenue and all that type of stuff.
Right.
That stuff takes time to play out. So that's for investors. Investors are people that are investing for the long term. I'm buying Apple because I'm going to hold it for 30 years. Okay, that's a different strategy. When we talk about
that's investment.
That's investment. Well, trading is more technically focused. So
price action, right?
Right. So the key to trading, exactly, it's price action. Mm-hmm. You have to become a master of price action, because hell, indicators get there. The indicator is indicating what the price action is telling it. So the indicator is behind the price action. The indicator's moves are based on price action. Mm-hmm. So if you're following indicators, you're already behind the game. You're already late, because the indicator is getting its information from the price movement in the first place. So I'm a big proponent of the price action, which is the old school way of doing it. Hell, you could actually have a chart. Just give me candlesticks and I don't need any damn indicators at all. Just show me the price action.
But would you say that if you go by price action, less indicator,
Less indicators.
is it more towards gut feeling then when you're actually gonna buy a stock or trade a stock, or at what point do you use technical indicators?
Yeah, you got to be careful. I don't go with my gut because gut's like throwing darts at a board. You
Right.
don't want to do that. You need to use your price action. And, if you got to have some indicators, obviously the moving averages are good because it's going to show you the average trend, direction of the trend. It's going to help smooth out because price action on a daily basis or time basis can be volatile. It can move around. So your moving averages are a solid indicator. You got to be careful when you have too many indicators because sometimes they can conflict each other. So I do like moving averages. I like volume, obviously, because any move in the stocks or any asset-driven marketplace is confirmed with volume. So I like volume indicators. I like maybe RSI, MACD, whether you have the moving averages that cross or converge and diverge. Those are good. But beyond that, I would definitely not get any deeper in the weeds. You don't need it. And then, obviously, you need to learn how to do support and resistance. That's basics.
I
like
think
that.
for everybody
You
who
got
wants to
that.
start trading, the most basic indicator is to understand your support and resistance.
Yeah, support and resistance, which is based on price action, right?
And
a simple moving average. That's all you need. Because at the end of the day, another thing that gets traders in trouble is when they're trying to do too many different strategies, too many different techniques. There are careers that are built on one strategy and one setup over and over and over again.
right.
So you don't need to be doing 50 different things and looking at 10 different, 20 different indicators and all these screens. You can build a career. You can retire on one or two things that you master. So that's my nugget on that.
What's your philosophy about trading versus investing actually?
Well, that's a good question. And this one is definitely good for beginners. You can forget about investing. If you got like a few $100s or your 401k, or you only got a few $100s that you put into the side and all that, you ain't got no money. You're not Warren Buffett. You don't have anything to invest yet. So trading is a good place to start so you can make some money to invest. If you don't have any money, you don't have anything to invest. What are you going to invest? Hamburgers and fries or $10 here, $20 there? You're not going to have anything to show for it. So it's better to master something that's going to make you some money and then take those profits and invest them in the long-term things. So it's about getting things in the right order. Sometimes we get out of order because when you start watching TV and YouTube and all these cats, everybody's got an angle, everybody's pitching something, and you can be chasing your ass, on there before you know it.
What about trading on the news then?
Oh shit! Don't get me started on that.
Like right now, Coinbase 6%, right? This exchange about crypto. You can right away jump and start buying Coinbase, which is the stock, right? The exchange of our cryptos,
Well,
and ride that sentiment, that trend on the upside.
Well, the news comes back to that same principle. The price creates the news. The news doesn't create the price. So a lot of times what happens is the news will say, well, Apple went up because of this. Really, Apple went up because of the price action, and the news is just trying to come up with a story to match the move. So news is basically noise. So you need to understand your technicals and your price action, and the news that drives the news, not the other way around. People get confused on that. Start watching CNBC. I just put that shit on mute. I see it, but it's muted because news is noise. You start following that shit on TV, you lose your money quick.
That's interesting. Because another question that pops on that, we talk about the philosophy about trading and investing actually, right? Yeah. Investing, you're buying shares, right? You're acquiring shares of a company. You're the owner of that specific stock, right? Yeah, won't make any difference to be the owner of two or three shares of Amazon that's worth $3,000, right? Versus having, I don't know, 200,000 or 300,000 shares of Amazon, that's, or a 10% owner of Amazon. It'll be crazy to understand that all the revenues and the earnings, all the earnings that gets generated every single year, you get 10% of that. That's crazy, right? And that makes more sense to actually talk about.
If you own enough stock, then your dividend checks mean something. If you only own $500 worth of Walmart, your dividend check's like 5 cents. happy.
Right.
You
Because
know,
this is actually interesting because I receive a lot of
thank you, please come again. You know,
I receive a lot of questions once in a while about, you know what, I have $1,000, I got $2,000 that I like to invest in the stock market, and it's very respect. I mean, I really respect that initiative of saying, you know what, I want to invest in the market. I got $1,000, $2,000, but you and I know that $1,000 will not get you that far for retirement. Let's agree on that, right? Um, but you know, you we're talking about trading on the other side, right? There's plenty of, which I'm talking something risky also here, because you can say, okay, there's this little thing called margin, right?
yeah,
we're,
leverage,
we're probably gonna deviate a little bit, but walk with me on this real quick, right?
leverage, yeah.
Which we call leverage, right?
Yeah.
What if I'm the broker? You have $1,000, right? What what if I'm the broker and
The bookie.
the bookie and tell you, you know what, Marcus, because you apply for margin leverage, I'm gonna go 10 for 1. Your $1,000 is not worth $10,000. So now you can trade any stock
Yeah.
with $1,000 as a down payment, right? And I'm gonna offer you a 10 for 1, $10,000 worth of that position or that trade you wanna go in on.
Right.
What's your philosophy about margin then? Leverage.
Margin is like crack cocaine. All right.
It's seductive
Yeah. Until you hit it.
if you're a trader, right?
You get
if you
on that-
if you do trading,
Yeah.
right? Leverage or margin, it's crack
It's
cocaine.
crack. You hit that pipe. You married to it. So here's what happens on that. The brokers are like bookies. They're not going to lose money. Yeah, they'll give you all the crack you want. Here is a 10-to-1 margin if you go on the Forex or something like that, or futures. You might get 100-to-1 in some cases. So they love to hand out margin or crack. You know, but here's the point: the more margin you have, the smaller the room for error. So if you're a beginning trader, that's like handing a teenager a pipe and a 8-ball of crack. They're gonna go blow their brains out, right? So if a new trader gets margin, they got to understand that if that 10-to-1, if your account goes 1/10 of 1% against your position, that broker's gonna liquidate your damn account. Thank you, play again.
Thank you, come again.
Thank you, please come again. And that's a hard lesson you're gonna learn. So yeah, there's a lot of people out here speculating and all that, and 1 out of 100 people might hit on a 10-to-1, but it's just like playing the casino. It's speculation. So you need to know what you're doing first on a 1-to-1 on par before you start putting leverage on it.
Right. And I think that my answer for those who say, you know what, I have a $1,000, I wanna trade the market. What do you recommend right now? My response is, your best investment or dash trade for $1,000 to invest in yourself in the knowledge of acquiring and
Absolutely.
understanding the market first.
Yeah, invest in yourself first. You got $1,000.
Because that $1,000 that you invest on acquiring knowledge on the market on a daily basis,
Yeah.
it's gonna go 100% X return
Right.
within a couple of years.
Right. Where's the camera at, production man? Right there. If you got $1,000, you need to sit your ass down because you don't have enough money to really do any damage other than unless you want to give it to the broker or the bookie. So you need to slow your roll down, start saving up a little bit more money than that. You can go ahead and open up your account, of your favorite trading brokerage house or exchange. Put your money in there and then start saving up a little bit of position. But the best investment, like my colleague said, is just invest in yourself first, because if you're talking about becoming a trader, that's a craft. It'd be no different than me talking about, hey, I'm going to be a sculptor or some kind of pianist, some shit like that, and I don't even know how to play the damn little electric piano my daughter got. That's stupid, right? So if you're going to be a trader, that's a craft. You're going to have to apply yourself. You have to get some skills, And then at the same time, while you're investing in yourself, getting your skills, start stacking your chips. Because just like when you go to the casino, right? There's the penny, blackjack, you got like the little $1, $5, $10 table. If you don't have no chips, you can't even get in the game, right? So stack your chips, learn the game, get some practice on your craft, and then make your move.
Or buy crypto. Fuck it.
Or just buy some damn
Buy
crypto
Dogecoin.
and let it rip.
Buy some shit coin with 1,000
and just see what
and
happens.
feel the adrenaline of your 1,000 being $400 in one day. The following day, $800. The following day, $2,000. The following day, $300, and so on and so forth.
And then go hang out with your friends and just tell a bunch of old war stories, because that's all you got.
And feel rich because you bought, you wise up and bought Dogecoin, and your 1,000 now it's worth 2,000, 3,000.
Yeah, you're gonna lose your shit.
But speaking on that, we talk about the market in general. It's floated with so much fucking cash. It's flush right now. And the central bank and the markets, the central bank is allowing that. We have the biggest bubble ever built up in the history of the financial markets.
We got Mobabs, the mother of all bubbles.
But look, I don't want to be anti-markets. Crazy. I fucking love that.
Yeah.
I love the fact that the central bank it's dumping a lot of cash in the market, because obviously that's throwing a lot of opportunities out there. But the game now, it's fast. You gotta be fast, because if you're thinking about being a trader, and understand right now that we are in an environment full of and flush of cash in the market, you gotta understand where's the hot money. But at the same time, what's your time period? Because one question that the team actually mentioned, that's why I'm building this argument. It's how long should you wait till you start seeing gains on your portfolio, right? That's very interesting.
Yeah.
Because that's, for me, it's the description about being greedy. And you know that, Juanita, right? When you daily trade, or we actually day trade, right? Your number one enemy when you're actually trading, it's yourself.
Yeah.
Why? Because you get greedy by putting, let's say, $1,000 on a fucking crypto, and you see that $1,000 generate you $400-500 in a day. But you know what? Oh fuck! I want more. I want more than 400. And the following day, boom, goes down 60% that specific crypto, and your 1,300, right? Now it's fucking what? 700, and you panic now, and you want to say, I don't want to lose my 1,000. I'd rather lose $300.
So you sell at the wrong time and buy at the
So
wrong
now your
time.
negative greediness in here.
Yeah.
Your greedy aspect of you now, it's turned the other way.
Yeah.
Now you're fearful, right?
It's the emotions of trading.
It's the fucking emotion of trading. So when you actually turn to this question and says, how long should you wait till you start seeing gains on your portfolio? It's how big are your bulls? To be quite honest, to sustain an endurance on the sentiment on the market. Because some people think when you actually trade, right, instead of having the market serve you on a daily basis, offering you, deals, it's the worst trader is the one who actually tried to serve the market. Because if the market one day wakes up and said, you know what, I'm bipolar, I'm fucking angry today, so I'm gonna give everybody who holds assets negative 5% today. But the following, I'm gonna give you positive 7%, and your sentiments, goes in and out on that part, right? And it's freaking crazy, right? So, closing this argument, it's how long should we wait till you start seeing gains on your portfolio? Okay, it all depends on the endurance and your time frame and horizon. And
it depends on your time frames. If you're day trading, then obviously you should be getting out on a daily basis. And if you're intermediate term trading or swing trading, then your trade can set up for a day, 3 days, or a week, or 2 weeks. And if you're trend trading or intermediate long-term trading, you could be in a trade for 3, 6 months, or a year. So you just need to know your time frames, which is going to help you determine how long you should be there and how much you should be looking to get while you're there. Is going to be based on your true range and your percentage moves and your historical, your expected moves that the market's giving you.
That's coming from a calculated trader.
Yeah. I do
Non-emotional.
no, I do this
Because
shit.
I'm listening. I'm listening like a robot. I'm listening like a robot right now about boom, 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 boom.
I try to take the emotion out of it. This is dots and circles. This is numbers. This is probabilities. I approach the market like a stone cold killer, like a pimp. I'm slapping bitches. I ain't in there trying to be saying that my rent money, I got to get this rent money. I don't approach it like that. It's just probabilities and numbers. I'm looking at batting average. I'm gonna lose on some. I'm gonna strike out on some, but I'm gonna manage my positions. I'm going to take my profits when they're there according to the expected moves of the market and what the numbers are telling me. I'm like a bookie. I'm playing numbers. I don't give a shit about who the fight is, McGregor or Mayweather. I don't bet on that. I'm betting on the balance of my book. I'm running numbers here. This is a numbers game,
That's
not
fair.
an emotion game.
And I think the fair answer for this question in a very basic way, it's it all depends on how hot that asset is classified currently. Right now, as mentioned, the hottest asset right now it's cryptos, and if you want speed right now on those gains, and you're not the type of guy who thinks, what, I'm just gonna slowly, invest in Microsoft every single month or every single 15 days or every single paycheck, right? You're more into looking at chasing the yield, chasing the gains, the performance, right? Obviously, the very first thing is to understand what type of class of asset you're gonna dump your money, and how hot is it? Because if you're gonna go crypto, which is the hottest, it's the most volatile, but the most rewarding. If you wanna go very, 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 very basic and low risk,
S&Ps or
buy a fucking S&P, an index, an S&P
Spider or
500,
something like that, yeah.
right?
Yeah.
S&P 500. Even Warren Buffett, the richest guy in the
They
world,
put big positions there.
always has it.
Get your 10% and go.
85%,
Yeah.
right, of the 85% of the time is going to outperform the S&P 500, the index, versus those portfolio managers, versus those hedge fund guys, people who manage your money and
Well,
shit
that's
like
what
that.
all the professionals. That's their report card. Every professional in the game that's managing somebody's money is their benchmark for their report card is the S&P 500. How did you perform versus the
But
S&P?
would you agree that actually those portfolio managers, the argument from Warren Buffett, it's that why try to lend your money to somebody else where you can actually go straight and buy the index?
Absolutely.
And 85% of the time is going to outperform those guys.
And then who's going to care more about your shit than you? You're giving somebody else your money. They're not putting 100% of their attention on your money or your betterment.
Right.
They're looking out for themselves. They're using you. So the best investment is obviously, Warren Buffett confirms that, invest in yourself. And then you have to have this is also a long game. This ain't no short game. I mean, even speculation, it comes, it goes. But this is the long game. You got to be doing this shit for life, essay. This ain't no like, you're just going to do it for like 3 months and okay, I'm going to go do something else. If you're going to become a trader, this is a craft. And this is a game that you play the rest of your damn life. This is for life. So if you're going to play it for life, then you're going to obviously learn and you're going to find something that matches your personality and your outlook and your condition and your financial condition. Everybody don't have the same amount of money. So you're going to tailor your strategies and all that to fit your circumstances too. And all that will work itself out if you play in the long game.
Right. Because like if you want to buy an index, the profits and the gains
You
are
have some
slowly
paper.
going gradually,
Yeah.
are going to increase year by year, month by month, but it's a slow approach.
Yeah.
I'm not against that. Actually, my entire portfolio, right, for the long term is an S&P 500.
A chunk of your
and a couple of stocks.
a chunk of your portfolio should be in the S&P. It should be like the foundation of it.
And
Goes up 18% a year.
fuck that 401k, all that shit. Just buy a fucking S&P 500 and gradually every single month start buying that. It's gonna get on the long term a great benefit that just putting your money on somebody else attention. But goes back in what you're saying. You have $1,000. You want to start with $1,000. Start investing in knowledge about the market, training courses. Go look at conference events, all that shit first.
And I ain't talking
Later-
about somebody
later put-
on YouTube that started 6 months before you. Not that kind of guy. Find somebody that's been doing it for a long time, and what they're speaking on or teaching on resonates with you. You know, there's a mentor for every situation, right? So some people, their strategies or the way they break it down speaks to you, and some of it doesn't. So you need to find someone that's been in the game a while, knows what they're doing, has already lost and won, and what they're putting down, the game that they're running, speaks to you. It speaks to you through and through. You say that dude, that's my guy right there.
Let me throw some bullshit real quick.
Bullshit. It's about time.
What's the worst stock you have ever traded?
Well, that's an easy one. As far as I'm concerned, the worst stock you ever traded was the last one you lost money on, because it doesn't really matter war stories about some shit that happened 5 years ago and all that. The worst stock that I ever trade is the one I lost the most money, the most recent one I lost on. That's the worst one. So the most recent one I lost on right now, I'm down, and even experienced.
Are we talking about?
Yeah, I ain't got
are we talking
nothing to
about the
hide.
fucked up?
I have nothing to hide.
Are we talking about the fucked up of you go against the market?
Yeah, I have nothing to hide.
Because we're losing shit
I had
money
like
on that.
10 winners in a row, not a shitload.
Well,
it's down, but it's not out. But anyway, yeah,
couple $1,000.
Even experienced traders make mistakes, and one of the mistakes I made is I faded the market because I thought it was overextended, which it is, obviously. But the way you handle an overextended market is not to fade it. Do not try to short it or go against the trend. The trend is your friend.
The trend is your
you
friend.
ride the trend till the mother freaking wheels fall off that
Cheers
bitch.
to one of my mentors who actually
You ride it. Let me say it again. The camera, where we at, one? Right there. You ride the trend till the wheels fall off that bitch. Okay? But here's what you do. Yes, it does get overextended. So how do you handle an overextended market? Position size. Don't put 5, 10% of your portfolio, go to 1%. Instead of 5 contracts, do 1. Instead of 100 shares, do 10. You just position size accordingly. That way, because at some point, an extended market will reverse.
we're seeing it.
It will reverse.
We're seeing that the market, it keeps going up and up and up, but the volume keeps going down and down and down.
Which is confirming that a reversal is coming.
But it's not happening yet.
Here's another thing that no trader can do. I'm going to tell you right now. I don't care who you pick your YouTube favorite guy or gal. No trader can predict the market. When it's going to turn, where the bottom, where the top, nobody can do that. If somebody says they can have some kind of tool or strategy,
it's like flipping a coin.
You can't do it.
It's a flipping a coin game.
All you can do is trade it until the market tells you it's turned, until the price action confirms that it's
and
turned.
then you react fast.
And then you switch your game. When the market turns and everything is confirmed, then you can switch your game. Don't fade it, just like I did here recently.
But you compensate with those crypto.
Oh yeah, I'm kicking ass on crypto. We're killing it there.
You make like a 35% on that return on that.
I had like 10, 15 winners in a row on the other thing, so I'm way up on that shit. Anyway.
I got you. But that's also the powerful thing about trading. You want to be 70%. You want to be 7 times positive, right? 3 times negative on 10 trades, which means 70%.
Yeah, you want about a 70% batting average.
Batting average.
Yeah.
That's what it calls.
Just
300.
$300.
It doesn't matter if you lose 3 times, 4 times at the most, but you're net 6 times.
And if you're managing your position size and you're taking your profits and you're closing out your losers properly, then your winners are going to more than compensate for your losers.
My biggest fucked up stock where I lost 80% of my money was trading uranium. Right? It was so hot at the time, right? And just to make the long story short,
Did you think you were going to be the Hulk or something?
No, I mean, uranium was actually very. Uranium was like electric vehicles, what it is today. And the trend was all approaching to uranium. But you know what happened? A fucking tsunami hits in Fukushima, fucked up a reactor, killed the fucking game. And that itself, just like you said, the whole trend changed, reverse in a fucking overnight flip. The problem when you're not a sophisticated trader, right? I didn't react as fast as possible because now I got greedy. I said, you know what? We're gonna recoup. I gotta recoup my money. Where's my money, Wayne? Where's my money, Wayne?
Yeah.
Right?
Start praying
And
for
and what
a
happened
comeback.
is the fact that you realize that the game is over,
Over.
but you didn't react fast enough for
Well,
that.
you didn't cut your losers short.
And I was 19 years old back in the day. That allowed me to understand that if you're gonna be a trader, you gotta be a fucking ninja. You gotta change.
You got to be cold blooded.
You gotta be cold blooded. If something changed, you gotta move that asset to another asset.
Kill
Because the thing with when you have a trend that's changing, right? It means that one money it's flowing in another asset. Money's never parked in cash. It's very rare.
It's moving around.
And when that happened, it's a fucking crisis. Because nobody wants to invest on assets. That's what happened on the housing bubble. Oh, everybody wants to stick in cash, but there wasn't cash enough, there wasn't enough money for everybody to pay in cash the investments. And there was the whole
And it had to reset, it had to
deflationary,
devalue, correct itself.
devalue it. So let's finish up with the last one. We talk about bullshit again, right?
Bullshit. All right.
What has been your biggest regret? Example, didn't buy. I don't know why they put AMC stuck at $9, but I guess I got it.
And what the production team is doing.
Because I bought it. I bought AMC 4 weeks ago at $70. Sold it at 81, right? Because it wasn't doing shit. But what happened? This chip shortage, right? Now it's 114.
Talking about AMD or AMC?
Oh, you're talking about AM. Oh shit, I'm confusing AMD with AMC.
I'm talking about a damn movie theater.
Damn, you're throwing Juan. You threw me some meme stock in here. That's why you put me AMC.
You have to forgive the production team. They ain't always on top of things.
I forgot we have millennials in here. I thought he was talking about AMD.
What's going on, Alyssa? Over there?
The
I
chip
see y'all. They
company,
can't see
right?
you, but I see you over there.
But he's throwing me a meme stock AMC. That's why I was like, AMD wasn't at $9.
What you talking about? Chips and movies.
But I got it. It makes sense. Yeah, AMC, it's fair. My biggest regret, just to wrap it up, it's not being able to buy fucking Bitcoin at $1 and put at least $5,000.
Yeah.
Right now it's $46,000.
I'd have loved to have been that dude what he paid for a pizza in Bitcoin,
Thousands.
and that pizza Bitcoin was like less than, it was pennies or something like that, and that pizza was like worth $36 million now. Yeah, I've been nice to have done that shit.
Shit, we wouldn't even having a podcast asking for money, for sponsorship money.
Y'all be seeing me on the French Riviera butt naked.
I wouldn't be here
Shit,
mercing
be
for
here.
sponsorships. I will be in freaking Paris or London, having a blast, But anyway, that's the biggest regret, not being able to buy Bitcoin when they offer me, and I think it was back then $3-4. And
Yeah.
I say I don't fucking believe in that shit. It's a fucking scam.
I
But
remember when Bitcoin was $1. Could have got it.
but nowadays we're heavily into fucking cryptos
Yeah, now.
because it works. But I guess let's not go too far on
We
that.
don't want to go too far. I guess we can throw a little bullshit on there. The good thing about the crypto is when you look at more established markets, this shit's a hustle, right? So when a hustle runs until everybody figures this shit out, then the hustle doesn't work anymore, or it gets
Right.
very hard. So the old school markets, your stocks and bonds and Forex, your cash markets, your derivatives, all that bullshit, commodities and futures, all that stuff's been around a long damn time. So when you got a lot of people playing the same game, it's harder to win that game. Crypto is new. That shit's new. Another thing I like about crypto is it doesn't trade on these bankers' hours. Crypto, that shit's 24/7, and it ain't in no one little central place like Wall Street, or it's not broken down like that. It's global. So this thing, you got. I like a game where a lot of people don't know the rules yet, and it's a lot of cash in it. It's like shooting dice on the block. I like a lot of like new guys coming in the game and putting their cash in there. It's gonna be some money made. So I love crypto because it's new. It trades 24/7, and it's got all kind of fresh global money in there.
And
so you got opportunities to take a lot of money up out of there.
the volatility is actually awesome.
Volatility is there, and new traders don't like volatility. Seasoned guys, pros, or guys with experience love it. I love volatility because it's just like if I point a gun at you, right? Which side of the gun you want to be on? The business end or the sucker end, right? So volatility works like a gun. You want to be on the right side of it. If you're on the right side of volatility, you're in control. If you're on the wrong side, you're getting your ass bitch slapped. So
Right. So quick takeouts on here. Volatility is great, amazing for a
beautiful
trader.
thing.
Cut your losses,
Short.
react fast, be a ninja when it comes about trading, and react fast when a trend change.
Yeah.
And the last one,
Know the difference between AMC and AMD.
a
One's
meme, a
movies,
meme,
one's
a
chips.
meme stock and a
Know
serious
that
stock.
shit.
That's the
That
difference
that would be
between
cool
another
to
one.
know, 'cause
But the other one remind me of my good friend and mentor. The trainer is your friend,
yeah.
right? Respect to that.
Some of my street mentors, the game is to be sold, not told, and keep your game tight, player.
All right, I like this type of conversations. I'm passionate about trading. You know it. I love stocks, markets in general. I hope we can have a lot of more conversations like this. Let's go a little bit more deep next time. Let's just give me a little bit of the nuggets. I would like to have comments drop below or reach us out. Or if you're a trader or you have some amazing ideas about investing or anything like that, or you just want to talk about finance,
Drop it so we can talk about it on the
drop
show.
it or come by to our podcast.
Yeah.
It'll be fascinating to have a conversation with you guys. Let's build a community around this. Because I know for a fact that there's a lot of people out there who wants to put money on the market. You have $1,000, put it first in yourself. Fuck around the other side of the.
Stack your chips because you don't have enough to play yet.
Exactly. But let's have more conversations like this. I really enjoyed this one. I love it. And I think that's a wrap up. Anything you want to say?
No, I mean, same thing. The whole purpose of this is to drop nuggets that people can use. We want to give value based on some of our experiences and experiences of our colleagues and team and our guests. So that's one thing that we promise on this show is you're going to get some bullshit and you're going to get some business and some value from it. And that's it, basically that. And everybody keep your game tight.
All right. Fuck Robinhood, by the way. Go Ameritrade. All right. That's a wrap. Thank you very much. See you on the next episode, on episode number 8, right? All right. See you.